Hi, I'm Mike Collins. I'm the founder and CEO of Alumni Ventures. Today, we're doing an introduction to venture capital for the venture curious. I'm going to cover the basics. I'm going to do it as I would talk to a friend or a family member who is considering coming into venture capital, either for the first time or perhaps you've just dabbled. And just going to share as much experience and wisdom as I can and how to think about this asset class. So let's take it away. Before we do, venture capital is a highly regulated industry. So I'm speaking to you today about the landscape. This is not a formal offer to buy or sell any securities, which are made only pursuant to formal legal documents. So common sense. All right, so I'm going to cover today what is venture capital, who it might be for, who it might not be for. I'm going to talk a little bit about who we are and what we do. Alumni Ventures was really built from the ground up for retail investors. That came out of my own frustration when I was not in the business, when I was more, on the entrepreneurial side of things, of getting access to both the quality and quantity of venture deals I wanted. Chasing down K1s was a pain. So, and then there's just a little bit of stuff about different kinds of people and goals, FAQs. But at the end of the day, we also encourage you to do some research. Well-informed person is really the way to go. Obviously, there's amazing tools now with ChatGPT and Gemini to help answer any questions you might have. They're really super tools, free versions available. But also from the high touch version of this, which is, we have people that spend their days just talking to folks and educating, walking them through, customizing solutions to meet their needs. So strongly encourage people just to hop on the phone for 15 minutes, old school. All right. So let's get into it. So just a little bit about my background. I grew up in the Midwest. Parents were teachers, came east to go to school. By coincidence, got my first job in the venture industry in 1986 at a firm called TA Associates. And really, my love and passion is at the intersection of technology, innovation, entrepreneurship, venture capital, people building things. I think technology and innovation really drives humanity, really the lens of social change, politics, war and peace, quality of life, healthcare. Really, underneath it, you can see the big sweeping changes of technology impacting mankind and the world for both good and evil. So really important and really fun to be kind of have a front row seat of that. As I mentioned, we designed our firm for the venture curious, and so we're here to help. But I'll walk you through a few of the basics today. Yeah, so usually this comes from a sense of a tipping point for people where they've recognized that, just playing in the public markets is really waiting a long time and missing out on huge value creation. That venture capital is a really important diversification. They're hearing from family and friends about participating in this asset class. And then we're all just human and we say, geez, I saw that company early, boy, I wish I had been an investor in Apple Computer or Google or Uber or Aura or something like that. So we'll show you how you can learn about it and how you can participate in the entrepreneurial economy in a way that you couldn't a generation ago. So what is venture capital? It's often confused with private equity, which is a little bit different. Private equity is more think leveraged buyouts, buying more mature business with debt, usually going in with some kind of restructuring, changing a management team, financial engineering. Venture capital is more investing in a small team that's trying to innovate something new and better, lots of times with technology, but not always as the core. And then basically you go along for the ride as that. Some of those win, some of those lose. It is very much a power law business. We'll talk a little bit more about how the hits make everything. But if you really look at the world economy today and where value has been created, it's been these kinds of businesses. This list, if you take the top 100 companies in market cap, you're going to find lots of venture-backed businesses. Few energy companies in there, but the vast majority of the Nvidias of the world, these are all venture-backed deals. And I personally, think that this is a golden age of technology. We have things going on, obviously, in AI and software, but really exciting innovations in health and wellness, energy innovation. We're seeing really all aspects of the economy. I think over the next 5 or 10 years are going to see profound disruption. Healthcare, education, transportation, national security, defense, cybersecurity. This is what we do. So it is a regulated industry. Again, you can have a philosophical debate about the government deciding where you can invest your money, but it is today. You must be an accredited investor. Those are roughly the rules. It has been opened up to more people just because it isn't inflation adjusted. There actually is some legislation going through right now where one can take a test, but it is for accredited investors only. This is a long-term illiquid asset class. So if you're going to invest in a company and go along for the ride, this is not something that you can say, hey, I'm going to call up my broker and sell and buy a boat. So you really need to think about long-term wealth creation, illiquid assets. So the way our funds are structured, it's kind of one check-in. So someone wants to invest as little as $10,000, and then as that's a portfolio of 20 or 30 companies typically, and then as those companies have exits, you get checks back. So that's really in the simplest form how it works. I mentioned a little bit about the power law. So again, in a portfolio of 30 companies, you might have 10 or 15 of them just fail completely. You might have 5 or 10 of them do okay, making 2 to 4x. And then hopefully you have a couple of those companies that just crush it. And, the shorthand is you like a fund returning investment. So basically one investment pays for everything. So if you put in 10 grand or 50 grand, one investment of the 30 will return that amount of money. I also think there's really important side benefits of being a venture investor. You get a front row seat to technology. It's a great way to, exercise your investing muscle. You're looking prospectively at things, not in hindsight. Oh, Apple's great, in hindsight. But, most of these great companies, bordered on bankruptcy or failure many times along the ride. So there's lots of good reasons. It's a great way to network. It's a great way to know what's going on, to help with your own profession, to help your family, your kids. I just think it is a tremendous asset beyond just the financial part. So where does one start? Obviously education. There are many good blogs, podcasts, webinars. We host many of them. where we break apart deals. We have master classes. We have some of our 40 investment professionals, host events where they're doing a deep dive on, small language models or nuclear fission or innovations in defense tech. We also have physical events. So, and then as I mentioned, AI is a great way to, I don't understand what anti-dilution protection is, and that got mentioned. What does that mean? So if you just type that in, you get a great definition today. I think it's a fundamental fork in the road, which is, do you want to do this all yourself? Or do you want to have a person that's your partner? I mean, we have a pool guy. We have, a team that trims our trees. We have people who do our taxes, and we have a travel agent. So if you want a partner to help guide you through this, that's a decision. I recommend it. I think it's a great thing to have someone to talk to, bounce ideas, listen, help you understand something. Obviously, you want to pick the right diversification allocation. You want to start small. You want to have a portfolio that is actually quite large. So the way not to do this asset class, in my opinion, is to randomly do a deal that your accountant shows you or your brother-in-law once in a while. If you want to do that, that's gambling and that's for fun. But the right way to build a venture portfolio is invest with top-tier people, leading firms, build a large portfolio over time. So those things I think will resonate with you that are very common sense about investing. You don't want to time markets. There is great association between the very best ventures and the very best venture firms. That's not because the venture firms are smarter than the others, but that the great companies have their choice of where they get their capital. So, yeah, that's a good starting point. So why venture might be right for you or might be wrong for you. So let's go through that. So first of all, some myths about it. You need to be ultra connected. You have to be able to pick the winners. You need to be a techie. As I talked about, this is just about making money. We have a material number of our almost 11,000 customers who have either made plenty of money and they're interested in kind of legacy and paying it forward, or they believe in something. So for example, we have a women's fund, which is full of people that are really interested in arbing kind of gender bias that exists within technology and venture investing. So they want to kind of vote with their pocketbooks, both because they think it's a smart investment and because it's what they want to do. But as I mentioned, there's the knowledge, the impact, the networking. Some of our people use venture as a way to help educate their kids, especially adult kids, a way you can kind of get them on the phone saying, hey, the family's looking at making this investment. What do you guys think? It's fun. It's interesting. And then this perception that venture is this super high risk asset class. And again, I think that's a myth. I think it's risky if you do it once in a while with some random deal that you're shown. I think if you do this in a professional, thoughtful, disciplined way, it's just part of a smart portfolio. And, you don't have to look further than where do the smartest money managers in the world have an allocation into private companies and venture capital. So next slide. So this is a little hard to read, even with my glasses on. But if you look at the purple, the top of it is the asset class that provided the best return in that calendar year. And you will see it varies year to year. All asset classes have good years and bad years. But purple's up at the top over the last, 15 years, a whole lot. It tends to have a little bit of kind of bubble crash phenomenon, which you see in 22 and 2016. Again, if you go back into kind of 2000, 9, 10, but consistently, it's a good performing asset class, especially if you look at the performance of the top tier venture funds, which our firm co-invests with at a big rate. I think understandably this makes sense in that we're talking about where value is really created enormously. I mean, if you were to drive within 20 miles of the San Francisco airport, you've probably had more value creation within that 20 miles than half of Europe and all of some European countries. So, that's just the reality of where value is created. One. Two, it's long-term and illiquid. So we live in a society that is very short-term oriented. So there's time arbitrage to be had if you have the discipline, or you invest in an illiquid asset class forces you to be long-term. So I think those are two logical reasons that this is an inefficient marketplace where those that do it right can do well. And as I mentioned, I mean, you look at endowments, you look at large family offices, you look at where billionaires allocate money. This is the goal of Alumni Ventures, is to let a successful person have access to what the rich have access to. So I see the trend continuing. I don't see being reversed in the next 5 or 10 years, given the state of innovation, technology, capitalism, etc. Now, as I mentioned, never a good idea to predict the future, to time markets, but there are good and bad eras of any asset classes. And, we went through a very unusual time with kind of a COVID boom and correction. And we just see it in pricing and deal terms. There's been a pretty good revaluation, a lot more realism. We won't know if 2025, 2026, 2027 are going to be good vintages for a while, but I think it's cracking up to be. And so this is the ask. We'd love to talk to you. We'd love to be your venture partner, understand a little bit where you are in your journey, answer any questions you might have, and customize something that meets your needs. So our firm, I started it over a decade ago. We're designed from the ground up for retail investors. You can get a portfolio of 20 to 30 companies for as little as 10K. Probably our average investor probably writes a check of 30 to 50K, and then they do that over time. And that's really a good way to think about it, is at what level is it going to be fun, interesting, meaningful for you? Where can you afford to be illiquid? What is the number that I feel confident investing the same amount every year for the next 4 or 5 years? We've been very successful. We're approaching $1.5 billion, 11,000 individual investors. We've invested in over 1,500 companies. We invest in 250, 300 new companies every year. We have a staff of 100 plus. 40 of them are located in the venture hubs of the United States, Silicon Valley, New York, Boston, Chicago. And then our back office is here just north of Boston. And we are well respected. I think the quality of the work we do, the way we try to help our portfolio companies, I think we have a really good reputation, and have our niche in the business. Again, we're not a lead investor. We're not kind of on CNBC bragging about this, that, or the other thing. We try to do our work. We get up every day to try to get into great deals. You should check out our portfolio. We put together, we call it an Apex 50 list every year of 50 companies that we're really proud to be in. Because at the end of the day, it's about access to great companies. And we invest along the spectrum, so pre-seed all the way up to late stage. We are, I think, especially well known for the actual returns on capital. So I'm not going to bore you with all these different terms, TVPI, MOIC, but we, in vintage after vintage, co-invest alongside top-tier venture capital firms, and so it makes sense that our returns are kind of in that profile. It will vary year for year, but you know, you're buying an asset class, you're buying relationship with us, and you're buying the ability to kind of customize to your needs. That's what we offer. These are some of our teammates. Again, we have 10 teams. We've designed it specifically to have teams work together. They have their own networks, their own vertical expertise. We run a very rigorous process with due diligence reports, and we build portfolios for our investors. So, you know, just tremendous team getting up every day to access amazing ventures. But the whole team really will help customize your portfolio. So again, these are well-known names within the venture capital industry. Again, we could put more, but you can see, you know, we're investing, you know, almost 50 investments with Khosla, Kleiner, Bessemer, Sequoia, NEA, Founders Fund, USV, etc. So, you know, you look at most of the deals we're doing, you'll recognize some of the people we're co-investing with on the exact same terms and conditions. So this isn't like layering up a bunch of stuff. We're doing the same terms as, you know, these guys are. So we co-invest. And we develop relationships directly with the CEO. So I just took one of our funds here. This is Blue Ivy, which is our blue team, and this is the Yale community. So here are just, you know, 5 of the companies within that portfolio. Upstart, public company, you can look that up. Aura, that's the ring that I think most people are familiar with. You walk down in an airplane, you'll see lots of Apple Watches and a lot of Aura rings. And these other companies are really interesting companies you probably haven't heard of, but doing really interesting work and doing really, really well. So this is just, again, a sampler from one of our teams. So how do you think about starting? So I tend to think kind of at the foundation is a core diversified fund. So this is our foundation fund, or if you went to one of our schools, one of our alumni funds. So this is a portfolio of 20 or 30 companies, diversified by sector, by stage, geography. It is a nice starting point for building a venture portfolio. And then obviously, as you winnow down a little bit, you can customize it. So we have focus funds. So again, really strong analogy to kind of public equities, where you could think about, you know, an ETF where it's really large and diversified should be the foundation. And then it's like, oh, you really want to overweight internationally, or with certain technologies, or you want a commodity or a REIT. That's the equivalent of a Alumni Ventures focus fund. So we have quite a number of those. So we have deep tech, we have health tech, we have a women's fund, we have a seed fund. So you can check out those as a way to kind of lean in to something that you find more interesting. And then kind of to top it off, we allow our investors to participate in individual company selection. So this is a company where we're investing, we've sponsored it, and we put in a data room, all of our due diligence and recordings and all of this stuff, so you can review it. And it's the equivalent of picking individual stocks that it really resonates with you. It's fun, it's interesting, sharpens your blade. A lot of our customers kind of do all of these. Some of our customers at the beginning just start with a core fund to just kind of keep, to get their sea legs. And but again, this is the kind of thing we love to talk to you about. Develop a plan. So we have a lot of different personas among our customers. And I just raised this up to be, and we're all complicated individuals that are more than one thing, but I just think this is interesting. We have a persona which is really a tech enthusiast and someone who really loves tech, reads science fiction, may work in technology, believes in science, and really wants to know what's coming and be engaged. Venture curious, these are people, again, and this is designed specifically, this presentation, for this persona, which is they want to learn, and this is new, and they want to understand it, and they want to, dip their toe in. A legacy builder, this is somebody who's, done really well, made their money, and now thinking more about impact, future generations, legacy. Trophy hunters, we definitely have a part of our community which is looking for alpha, which is looking to have a big return, which is looking to balance out a very potentially conservative rest of their portfolio, where they're willing to kind of, swing for the fences and take on a little more risk, and but potentially have kind of life-changing outcomes. And then asset allocators. This is kind of the channeling the Warren Buffett mindset of unemotional diversification, compounding. Other parts of my life are way more important to me. I'm just going to follow a playbook and be very disciplined about an annual allocation into different asset classes and letting it be diversified and not look at it every day and let it compound over a decade or two, and you wake up and you've done incredibly well. So, and we have more, frankly, than this. We have about 15 personas, but to just give you a flavor of, this is why we like to talk to you, develop a plan, get you what you want based on who you are at this point in your life. And these actually, people move from different personas over time, but we really want to listen and understand kind of where you are. So yeah, I mean, are you happy with your venture portfolio? Are you happy to not be in this asset class? That's fine. It is not for everybody. But if you are, we'd like to talk to you. And again, we have great people, really easy to talk to, try to make it super simple. We really try to listen, like where you are in your journey, why you're interested, where we could potentially help. So just encourage you to hop on the phone and book a call with us. We also have a website, and again, there's a lot of stuff out there for you to consume if you're not quite ready yet. So thanks for your time today. We do have a couple of questions that have come in that I'll briefly try to answer. How does your firm's portfolio diversify from other firms, particularly stage? Well, first of all, we invest, unlike other venture firms, we diversify among fund managers. So And that is really only done by the very largest, most established endowments who are able to, they have so much money that they can, get into Khosla, Sequoia, Andreessen, et cetera. A lot of those funds are actually closed off, and most even large pools of capital. I was talking to one large entity, and they were in one of the funds that we co-invested with. So, and they had all the money you could imagine. So, just money does not get you access to the very best venture funds. So that's a form of diversification. Within our core funds, we actually diversify by stage. So there'll be seed, there'll be Series A, there'll be a few later stage deals. Oftentimes the later stage deals are follow-ons to previous deals we've done. So when you write a check, it's one check. Part of that we'll keep for reserves to put more money to work into your portfolio companies that are doing really well. You like to get in early, you like to chase your winners. Again, these are all companies that we find, we'll make the investment decisions, we'll allocate it, and then all you have to do is, go to your mailbox. We send our distributions in yellow envelopes, and so, cash your check. But yeah, we're well diversified. Again, we do have a seed fund, and we have a CIO select fund for people that want to either focus a little more on early stage or a little more on kind of follow-ons. So again, but that comes into kind of the customization focus fund flavor of developing your portfolio. So how do we get our deal flow and how do we get into the very best deals? So we have 10 teams. We have almost 50 investment professionals. That's their core job, is to develop relationships with portfolio company CEOs of companies that we think are doing really well. So, obviously we're organized around teams. We're organized. We have really strong kind of alumni connections, which is a really important nexus. We have a powerful scout network. We have a lot of reputation within vertical markets like health tech or strategic tech or deep tech. So it's a lot of networking. It's a lot of competing. The very best deals are competitive. So a lot of times as a co-investor, we'll get an allocation regardless of who wins. So you'll have two top tier venture firms kind of competing to be lead investors and have different term sheets. And we try to tuck in and do 5% of the deal no matter who wins. And why does the CEO let us in? Because of our network and our Rolodex. We disproportionately try to help our portfolio companies with connections. So the fact that we're a large community, the fact that we're retail investors means we have an incredibly strong network of people that can be really helpful to our portfolio company CEOs. So that's how we get into deals. Can I invest retirement money? Yes, and actually that is a choice that a lot of customers make. We tend to mentally bucket that money for the long term, and so it can make a lot of sense for people to allocate from that bucket. So how do you manage conflicts of interest when multiple AV funds are interested in the same sector? Well, one of the things is we're not on the board, so we don't really have that kind of insider information. So, it does happen that over time companies become more competitive with each other, and that can create a conflict for kind of a classic case of Google being on the board of Apple. And early days that was fine, and at some point that was untenable where they were competing. Because we're not on the board, it's a lot less of an issue. But yeah, our teams work together to get into deals many times. And it's really not an issue that we, you know, can't invest in both Coke and Pepsi. Doesn't happen that often, but it's really not a problem. Yeah, so great questions. Again, just really encourage people to do their homework. Obviously, I believe that this is a really important asset class for people to have in their portfolio. And so we encourage you to do your research and talk to us. So thanks for your time today. It's been great.